From one retail investor to another. This is Trader72. Welcome back to my YouTube channel. I hope you are all well on this fine early part of the week. It is a sunny, slightly coldish day in London, but it is sunny. That's the main thing. And will it be a sunny week? So, it's been a while since we last spoke. I think it was, I dropped the last video, I think on Friday. And on today's show, we're going to be breaking down PayPal, one of the biggest names in digital payments. The stock's been seriously beaten for the past few months, down to obviously the SaaS revolution. And it's fallen off its previous highs by quite a bit. So is this a hidden bargain or a value trap? That is the big question we're going to be asking today. And as well as going through the ecosystem of the company, what it does for some of you that may not, but obviously I'm sure most of you will. And amongst the numbers, the pros and cons, bear versus bull case, or bull versus bear, whichever you want to put it. And just my final thoughts as per usual on these analysis of where I think we are at with this stock on the back end of this analysis. We'll quickly go through my own stocks and shares at the moment. I have actually cleared the decks from last week, which I don't think you guys were aware of when I last dropped the show, uploaded the show. I've sold off quite a few of my companies on the back end of last week's highs. I felt it was probably the right time to do it. I'm in it for the long term, but I just felt that it was possibly a little dip up that I needed to cash in on at this stage. I felt as well as some of the buys I made were potentially could be better. So change of mind, but I'll come to that in a minute in terms of explaining how this works, excuse me, going forward. So let's get on without further ado on PayPal and where it's at the moment. So we're going to do a deep dive. What is PayPal? So we know that everybody thinks that PayPal is finished, like a lot of companies do in terms of these type of I wouldn't say that SaaS completely, but obviously software companies. There's been a few issues we know of, but it is a world-renowned name. PayPal is the middle merchant, really, the middleman between yourselves in terms of buying, and obviously it's a little bit like a Visa card, I suppose, in that respect. But the numbers say otherwise, obviously. So let's see what we can dwell from there. So let's start with the actual business itself. We'll quickly go through PayPal as a company, and we'll go through, how it does and how it works. So it's obviously first and foremost an online payment. That's the core business at this moment. It pays for goods on websites such as eBay, retailers, sends money to friends and family, receive payment as a seller or a freelancer. So instead of typing your credit card details, it's everywhere. So you just log into PayPal. So that's the core business of PayPal. It's known for digital wallet services. Can use as a store card and a bank account, holds balances in multiple currencies. It's also a merchant services, so a big revenue driver for the business, accepts payments on websites, apps, offers pay with PayPal checkout. It also handles fraud protection and security on behalf of the buyers. So that's some of the businesses that obviously are used. It's also peer-to-peer payment through services like Venmo in the US. PayPal enables instant transfer between individuals, social style payment, and splitting bills. It's also a credit and financing company, so it can be a buy now, pay later, very similar to Klarna. Credit lines for consumer, working capital loans for businesses. And how does it work? How does it make money? Well, it makes money for every time you use it. Obviously, it's through a transaction fees. That is the main income or the main source of income for PayPal. It also does currency conversion, interest in lending product, and merchant services. But predominantly, the transaction fee is a bit like a Visa or a Klarna. Every time you use it, you have a fee attached to it. So that's the way it works. Obviously, the strength of the business is as a trusted global brand. Users, huge amount of users, millions of people use it every day. It's got strong network effects and high margins. So let's see how we break down the company in terms of numbers. Now we know what parts of which is what the company does. So PayPal's revenue breakdown, as you can see from this graphics here, so the transaction is obviously 90% of the income or the revenue for PayPal is through transactions. So that's 90% of the income. That's quite a huge amount. That's obviously through checkout fees through Braintree and Venmo, obviously, and that's around 29.8 billion pounds. There's interest. The other part of that side of it is obviously the value-added services, 10%, which is 3.4 billion, which is the obviously buy later fees, which are interest of 3.4 billion. And then you've got checkout fees as well, other checkout fees through, again, Braintree and Venmo, which calculate for that. So interest, 3.4 billion in interest just alone on buy later credit card fees. So again, quite a large amount there goes through transaction. I think it's pretty straightforward in that respect. Breaking down the business now. We've kind of broken it down already, but it just shows you what it has under one roof. Obviously, Venmo we talked about, which is peer-to-peer, Braintree, which is behind-the-scenes payment, and core platform, send money, online checkouts. Again, this is how they make their money. PayPal make billions through moving money effectively and protecting the buyer from the merchant as well. So it's a kind of a well-known name that you would send your money to. You feel safe putting your money into them for transactions to the actual end of the line. To break down the numbers. Now, this is where it becomes interesting, obviously, because this is just a very brief breakdown on PayPal and where they're at. So let's start very much so with the market cap, which is $40.8 billion. And it's versus its enterprise value, which obviously tells you where the debt is. So there's obviously quite a bit of debt there between that, but obviously it is a payment card and merchant, so there will always be some kind of debt attached to that. But it's, you know, what it is. The biggest point for me really is the cash flow, the free cash flow. And as you can see, the free cash flow for a company that apparently is distressed is moving up quite nicely. The free cash flow is obviously the lifeblood of any company. It obviously is used for capex, for paying dividends and reinvesting effectively the money into the business. And at this moment, as you can see there, just to give you a kind of a comparison on a 5-year to currently the trailing, you can see that the free cash flow has gone up from 5.3 to 5.5 in the last 5 years. So for a company that's supposedly distressed, it seems to be doing very well, thank you very much, with cash. Again, looking at the net income, which is pretty much in line with the free cash flow. Net income is what most people look at, but really what you should really be looking at is the free cash flow. That is the lifeblood, as I said, of the company. I think this is the most important. Net income is obviously, you know, the actual the money that's left over after obviously payments and overheads. So again, the free cash flow, the net income has moved from 4.4 to 5.3. If you look again at the profit margin, it's gone up every year for the last 10 years from 11.78% to 15%. So again, if you ask me, if you're saying to me that this company is on the way down, well, the numbers don't lie, for sure. And that's always something that accountants will say to you. It is moving up. Gross profit margin, yeah, not as impressive as some of the other tech companies, but it is still at 46% gross margin. Again, very impressive. Revenue compounding for the past 10 to 3 years, again, moving from obviously it has slightly gone down, but it has become a bigger company, but still impressive at almost 6%. So return on invested capital, which obviously is the one I look out for most. The minimum criteria for me is 10%. It's at 14.68%. It's gone up again for the past 5 years from 11 to 14%. Obviously looking at the 52-week and 52-week high, obviously it has gone down quite a bit. Interestingly enough, though, if you're looking at the P ratio, which is obviously the future earnings of the company, it's gone down from 17.8 in the last 5 years to 7.20, which is super cheap. Obviously, we know why. But obviously worth mentioning there on that side. And of course, the dividend yield is they're still paying a fairly interesting dividend of 0.32%. So that's the numbers for PayPal. And now, like I said, if we're looking at this straight for black and white for the actual numbers, the company is doing very well indeed and is cash rich. And that is also something very important that you guys should definitely bear in mind if you are to invest in PayPal. As I said, I'm not a financial advisor. I have no financial background. I'm just here purely on advisory side of things. And obviously, please do your own due diligence. To PayPal's pros and cons. Now, we have got obviously some, like every company has a pro and cons against what the company should be doing and why the company is at its where. There's obviously a good reason why the company is on its knees at the moment in terms of share price. So let's have a quick look of why we feel this is obviously. So the last update really from PayPal, we had obviously the CEO resigning after pretty much a miserable time, and obviously there's been some cost cutting, and PayPal went down about 20% on the back end of the last trading update, which was back in February this year. It missed for Q4 earnings, issuing a weak Q1 and 2026 forecast, which is never a good thing if you miss a forecast. I think the current numbers speak for themselves, but really going forward, if you don't give a good guidance, as we all know, that can be disastrous. And this is why you should never really, if you can, invest before an earnings, because that is pure gambling, really, in that way that it could go either way. But most of the time, forward guidance is a key point to any earnings. The company replaced its CEO with a new leader, Enrique Lores, facing skepticism due to the operational focus and innovation, raising doubts about his ability to drive necessary forward. Despite potential from Venmo and buy now, pay later, analysts remain divided on PayPal's long-term projects. So, again, it's not all good from that point of view. So this is where the weaknesses are for sure. I'm just going to give you guys a clip now of a more of a bull case of potentially why PayPal may be something to look at for the future.
Oh, you're going to kick things off for us.
Yeah, we were curious who was going to go first, so I'll take the reins here. Let's do it. So, all right, so PayPal, you know, as you demonstrated on the chart, it certainly isn't the hyper-growth story anymore, but it doesn't need to be. So as execution stabilizes, you've got a high-margin, cash-generating fintech trading like it's broken when it's actually recovering. So unlike many fintech, PayPal, it's mature, it's profitable, it's self-funding, which gives itself downside protection and kind of long-term compounding power. So lots of stuff checking its box in the win column for it. But I want to quietly kind of dig into a few things that are profitable and are growing and they're re-accelerating. So let's go through a nice list of wins in their column. 2025 revenue, $33.2 billion. That's up 4% year over year. Total payment volume, $1.8 trillion. That's up 7%, once again, year over year. Earnings per share, $5.31. That's up 14%. So we're continuing. We got some nice wins here. Operating income, another year over year increase, 9%. Margins also increasing up to 19%. So we've got a lot of nice momentum building in their favor. And growth may look mid, as the youngins might say, but earnings and margins are compounding faster than revenues. It's a classic setup for expansion and big multiples when sentiment does shift. But next, PayPal is not just kind of like your PSP provider. It's PayPal is a diversified revenue stream that's got long-term growth and it's really compounding on a fast way. So it's no longer just a checkout, it's a multi-engine system.
So as you can see there, it kind of reiterates what I just said about the fact that obviously PayPal is more than just one business. It has several businesses, and its numbers and figures are certainly very impressive still at this moment, and still no signs, I feel, of weakness that other people are mentioning in the market. Remember, guys, it is all about rumors and about people talking and analysts having their own opinions. But really, the only way you're going to find out if the company is right is to do your own due diligence, your own research, and look at the numbers. Because as I said, numbers don't lie. So let's go back to the pros and cons of PayPal here. So obviously, as we said, strong brand, massive scale, consistently high with cash flow, profitable, plus margin expansion clearly ongoing. Our stock is massively undervalued. We'll come to that in a minute in terms of where we feel the stock is at. The cons, slowing customer growth. For sure, there's been a slowdown there, together with competition from Apple and Stripe, which obviously are now start to kind of bite into the moat. And that is definitely something to look out for potentially for the future as people are looking for different types of various of earning sources, especially for the big boys. Free fee pressure from macro environment. We've seen that with credit cards recently, where there's been pressure on capping on interest and fees, or the transaction fees that they're charging. Again, could that be affecting PayPal? Yes, it probably could. And at the moment, really, it's been hammered down by the markets and not giving a single break. As we know, it's currently at $50 a share, which is the cheapest it's been in almost 5 years. So we're definitely looking at some constant pressure on the share price from the market itself, which has, for some reason, decided that PayPal is suddenly a bad company. Of course, every company goes through ups and downs. We know that. It is what it is. So let's go through the discounted cash flow model, guys. Obviously, you know that this is something that I tend to abide to and work with in terms of future investment for any company. The true intrinsic price value is what is key here. This is something that I've learned from various different investors that I've picked up over the years. Please do check it out. At some stage, I could probably do a video about it, actually more in detail about how it would work. But this is probably the best model to look at it in terms of where we're at the moment and where we think the true price of PayPal is at this precise moment. Now, as you know, guys, it's about the free cash flow for the past 10 years and the future 10 years, as you can see here. At the moment, it is more about trying to work out where this key number here, the growth rate, is for every company. Once you've worked this out, whether you think it's conservative or aggressive, and you feel that the company is going to be earning over the next 10 years. Now, on a 10-year KGAR and a 5-year KGAR, we're looking between 16 to 2%. Now, there's obviously been a downward slope slightly in terms of growth rates. So if we are going to be very much on the conservative side, and looking at zero growth for the next 10 years, then we're looking at a value of $69 a share, which is a 17% upside on its MOS. Now, my guess is that I think it will be probably around more the 4% growth. The company is still growing, as you saw from the numbers and the revenue, etc. So I think 4% is quite reasonable, which does give us, based on a terminal rate of 3% and a discount rate of 8%, which is obviously the ongoing average that we would look at for a company of such. We're looking at $89 a share, which gives us a 50% discount of MOS. Now, that is what I would call a bargain. Now, obviously, the company story has to match with the company share price. So obviously this is not just going on that. So please, guys, just don't go on the fact that it's just a 50% bargain, therefore I'm just going to buy it. It needs to match with the story of the company, where the company is at this moment. And of course, as I've highlighted, there are a few issues in the background that are obviously affecting the share price. There's always a reason. But the reason why I'm insisting on buying based on a discount rate is because obviously you're buying a stock not at the value of the market, but at the true value of the company, which means that if you minus this with a margin of safety, you guys will get less hurt if the company falls further down because you already bought it at 50%. So I think that's potentially something that you guys should bear in mind. Just to reiterate as well, the reverse DCF, which is what the market factor in, is minus 2.5% growth. So we can see that there's room for growth between the growth rate and the reverse DCF. So again, something to bear in mind, but I think that is actually a pretty good ballpark in terms of where the share price should be as intrinsic and what we're looking for as a upside. My final thoughts, guys, on PayPal, and this is obviously not a company that I've got on my portfolio, so I haven't actually invested in this one. I did in the past when it was a slightly higher price, but it has obviously been, as we've discovered, pretty much hammered for the past 6 months. Is PayPal a smart long-term play? Now, we know we've already established that the share price is at discount. I mean, it says 45. It's 45 to 50% depending on the growth rate you go for on your intrinsic price. So currently at the moment, it is a real bargain. What is the right entry? Well, it's currently at $50 a share. So I think it would probably be worth looking at possibly entering if you were interested. Obviously, please do your due diligence. It's not me telling you to buy. This is, you've got to make your own decision on this. But if you were to buy PayPal right now, I think at 50% discount, it is a pretty good entry point, really. So let's have a quick, let's get a quick look in terms of the actual graph in a minute. But value is there, patience is needed. It will be a long-term play, and I do mean that. I don't think you're going to see PayPal moving up back within its 52-week high in a hurry. So this is definitely a long-term play. Short-term pain for long-term potential if the new strategy delivers growth. So it will be down to obviously their performance. It will be down to, as I said, the cons and pros of the company and where the company will position itself within the next 5-10 years. Will PayPal be around in 10 years? That's the question I always like to ask myself if I'm investing in a company, and I feel it will be still up there as one of the big payment companies or the merchants they are. There's so many different tentacles to PayPal that I can't see them not being around for the next 10 for sure. So let's have a quick look at where they are on terms of charts. There you go, guys. The PayPal holdings current chart. Now, we are based on the 1 week chart, which obviously gives you an overall picture of the past few years. It is well below, obviously, clearly its 200-day moving average and even 50-day moving average. It has had a slight bounce, but obviously it reached pretty much their rock bottom on the back end of Q1 at nearly $38 a share, the lowest it's been in almost 5 years. So actually, if we push it back to even back to 22, I mean, really, we're looking at levels of 2016 at the moment. So it is definitely a bargain in terms of the share price. Now, whether or not, there's issues to be involved in this, we have to work this out. As you can see from the MACD and the Stoich, which is the momentum indicators, it looks like there is a bounce at the moment, a slightly feel better factor. Obviously, there will be a further update, trading update coming up, I think, in the next few weeks. So they'll be interesting to see where they are. I think it might even be this week, but you guys should check that out. And again, let's see what the new CEOs may have done in the last quarter to see if there's any improvement. It certainly is a bounce at the moment at $51. Now, in terms of its high at 92 back in even December last year was quite amazing. But obviously, the share price at some stage or another was around $250 a share. So it is a massive fall from grace. And obviously, quite a few companies recently have had the same issue, especially on the SaaS side. So yeah, I mean, my guess would be that if I had the allocation at the moment, I would probably look at investing into PayPal as a company, just because it still has various different businesses that are a very good income stream, very good fundamentals. The share price is cheap. At 50% discount, and I think based on that and the fact that PayPal, I feel, will be around for the next 10 years as a company that will grow and probably further grow, and potentially even with AI, that this company will still be around. So for me, this is potentially a buy, and potentially an entry point right now at $50 a share. I mean, if you guys really wanted to squeeze it out of it, see if it may fall back a bit and buy back in. But as I said to you guys, this is not a short-term play. This will probably take a while before it even gets to anywhere north of $100 a share. So I would be very, very patient. The last few times I've earned it, it certainly hasn't moved that much, but it could be a compounder going forward. So that's my thoughts, guys. Please comment below if you agree or not with me. Always happy to see what you guys think. As I said before, I don't get enough comments from you guys, so always happy, even if it's negative, positive, it doesn't matter to me. So that would be great to have. So that's PayPal for you guys. I'm going to go now quickly through to my portfolio and where we're at the moment since last week and the markets at the moment. There you go, guys, at the moment. So going forward for the markets. Now, we are at the moment in a little bit of a holding pattern at the moment. I think the markets are not sure which way this is going to swing. Main takeaway of the last few days has been obviously the Iran-US conflict, peace or no peace, talks or no talks, we're going to get together or not. Trump says it's coming to an end. The next, it's not coming to an end. The blockade happening. Strait of Hormuz was open on Friday. We had a huge boost and it was closed down within 24 hours. So really at the moment, it is a guessing game where the markets are. At the moment, Iran ceasefire's deadline. And as you can see there from the headlines, it is really ongoing. Now, potential peace talks again in Pakistan are due in the next few days. We know that the next 10 days, peace agreement is now coming to an end within the next 24 hours. So I think the next 24 hours, as I'm pretty sure, will be pretty crucial to where the war goes and where the markets go as well. So let's have a quick look at the current markets. In the green at the moment, the NASDAQ and the US 30. Not much movement, as you can see. From my point of view, though, guys, I have got pretty much rid of all of both Uber, which I did say I would probably look at long term, but for cash reasons I needed to take some cash out, and I cashed in with a profit, a nice little profit on both companies. Visa, I felt I could buy at a better price. I bought it at 314. I think Visa is struggling at the moment to get any kind of direction, and if I could buy it slightly cheaper than the 314 I bought it as, I think I may well buy back in. So I cleared the decks a little bit there. Adobe obviously still being the biggest loss, as you can see, is still obviously there. That will be a long-term play, as a little bit it will be potentially PayPal. Again, another company bashed by the markets for no real reason, I feel. I still have my position in crude oil. Currently, at the moment, I was in the green. I made quite a bit of money on crude last week when I bought in at 98. And of course, there was this massive rally on the back end of the Strait when it's been open. And obviously, cashed in on that. I left my current original position of 92 short on crude oil. And it's now back in the red, obviously, due to the circumstances of the last few days. So we will see where crude oil goes next. It will be interesting. I will be buying more if it goes north of 100, and I will stick to the position I'm in at the moment if it stays where it's at. It's only $3 off where I bought it. So really minimally in the red at the moment. I will still be looking at buying back into Uber if Uber was going back into maybe 72. Visa did fall back into the way I bought initially, but I don't feel it's quite right. S&P Global, I'm really gutted about because I sold that and I could have probably bought it a little bit earlier. Ifs and buts, the beauty of hindsight with being a retail investor, but it is what it is. United Healthcare is actually up at the moment to 337, nearly 4%. Now, I'm going to presume that potentially news came out. Obviously, it's their trading update. And as we can see here, United Group posted first quarter. You got it here, as it's literally fresh. First quarter, I think net earnings attributable. Revenue rose by 2%. Earnings from operations slipped to 9 billion. Medical cost ratio narrowed to 0.9%. Ouch. Percentage point to 83.9, which is pretty good news, while cash flow from operations climbed to 8.9 billion. Now, the big important part here is United Healthcare lifted its outlook for 2026 to $17.35 $70 per share. We just adjusted earnings seen above the USD at 18.25. So again, not bad numbers, and potentially why the stock price has popped to 3.5% up to 336, back to the levels it was last year, unfortunately, when I owned it, where I could have probably made a killing on it and held it too long. So again, for clarity there, guys, sometimes holding too long might also be an issue. Again, in the past, it's one of these things, but certainly the share price at the moment is moving fast, as you can see there, to 342. It was at 323 on the opening this morning, so definitely seems to be positive news from that trading update. So there you go. So that's where we are at the moment. This is my first, obviously, upload this week. There will be probably a further one before the end of the week. Please comment below of anything I've spoken about. Please subscribe and like, and I look forward to see you guys for the next one. Take care and see you soon.